So good evening, students. A very good evening to all of you. The students, Kuldeep, good evening, good evening. The students, Vasu, Aishwarya, Chandni, Meena. Thank you, Meena. So students, over here, in this, Indrakshi, good evening. So today, students, will be the part B of your November 23 RTP class, which so RTP students, in this case, as I told you in the last segment, those for whom this is the first class, I will be putting the description box of the part A. Aparna, Punita, thank you very much. Indrakshi, thank you. Praising, thank you. So in this case, students, I will be putting up the link of the description box, probably in the link of the part A, those who have not referred it. Okay. As I told you, students, this RTP is one of the important RTPs. Lovely. Thank you, Lovely. This RTP is one of the important RTPs because you find a lot of good questions basically. That is a part of this particular RTP. So part A of the RTP, after the lecture is over, I'll just put the link of it in the description box. Please ensure to go through that. Very important questions. First of all, apologies for this, that for last 4 days I could not be with all of you for this part B. There was one old batch which was supposed to get completed. So they were in the last topic. So I thought just first to complete that particular batch, and so that the students also could be in a position to participate in the session. I'll start with this, students. First of all, this first particular case study. This case study, students, because it is in the RTP, I'm doing it. But I'm sure that many of you would have done some good questions earlier also. Also in our classes, in our batch, we have done some very good questions on the assessment procedure. Hitesh, good evening. So therefore, this particular question or the case study, because it is in the RTP, we are doing it. Otherwise, some much better level questions we have done it in the other particular of the old attempt RTPs, or suggested as the case may be. I think old attempt RTP had some much better question than this. Shall we start, students, quickly run through it? So let's start, students, quickly on this particular question. So what they are saying over here, students, is about the assessing officer with the prior approval of the chief commissioner. So some of the important wording, students, you have to be very careful about it. The questions will be using some important terms that you all have to be very, very careful about it. You'll say, sir, which are the terms? I'll let you know. Just be very particular about them. So the assessing officer, with the prior approval of the chief commissioner of income tax, surveyed the business premises of A Limited, which was within his jurisdiction, at 9 p.m. on 1st of June 2022 for the purpose of, students, please understand the word, Ram Kumar, they have used the word surveyed. This word has been used, that is surveyed. So it is 133A. 133A. So surveyed the business premises of A Limited, which was within his jurisdiction at 9 p.m. on 1st June 2022 for the purpose of obtaining the information which will be relevant to the proceedings under the Income Tax Act 1961. Fine, students. Ambika, I do know, Ambika, you were there in the last batches. Congratulations. Good show and all the best for your Group 1 examination. Do take care. Now the survey operations continue till 11 p.m. Students, what is important is that you should enter if it is a place of business. Then when you should enter, students, you should be entering it in the business hours. So during the business hours, you should be entering the place. What is the time of exit has got no relevance. That is what the survey is all about, isn't it? So the survey operations continued till 11 p.m. On 15th of June 2022, the assessing officer entered the be careful. On 15th of June 2022, the assessing officer entered the business premises of B Limited, Nandagiri, which was also within its jurisdiction at 8:30 p.m. for the purpose of collecting the information which may be useful for the purpose of Income Tax Act 1961, and left the premises at 9:30 p.m. Can you see here, students, the difference? You can see here they are using the word surveyed. For the first category, students, they are using the word surveyed, and for the second category, they are using the word entered. Is there any fundamental difference between the two? Surveyed versus entered? Quickly, students. Surveyed versus entered. So over here, surveyed, if they are using the word, I told you already that it will be the provision of 133A. If they use the word entered, then it is, in this case, it is 133B. 133B, students. Now the business premises of A Limited is kept open for the business every day between 10 a.m. to 10 p.m. and the business premises of B Limited is kept open between 9:30 and 9:30 p.m. One important point. In the case of 133B, where for the purpose of collecting the information, you enter the business premises. The word they don't use survey in 133B. Now, when you can enter in 133B? During the business hours. What about 133A survey? In survey, students, there are 3 points. What is the 3 points? Number one, in the place of business, it has to be what? During the business hours. Other than the place of business, like charitable or religious, charitable places and all. In that case, for that, the TDS part of it, TDS and TCS, for the TDS and TCS part, for the purpose of verifying whether the compliance of the TDS and the TCS provision has been met or not. So for those premises, you have to enter after sunrise but before sunset. You have to enter the place of survey after sunrise, before sunset, and the third particular place of survey for which the timing is that, remember that the functions has happened. So in that case, the event or the functions, if you want to do the survey, so you can enter only after, you can survey or you can enter only after the functions or the event is over. So there are 3 times so far as 133A is concerned. But when you compare with 133B, which is not a survey, which is only to enter to collect the information, for that, students, you all are aware, it is what, students? Indeed, it is during the business hours you will have to enter. During the business hours you will have to enter. I hope that all of you are clear with this one. Every one of you. Shall we proceed, Aparna? Abhi, in this particular case now. So I think so far so good. No issues on the first paragraph. A Limited, B Limited premises, you have entered during the business hours. Absolutely fine. Not an issue at all. Let's see the next paragraph. In the above cases, the assessing officer impounded and retained his custody for a period of 12 days, inclusive of holidays, books of accounts and the other documents inspected by him after recording the reasons for doing so. Students, please tell me, in 133A survey, can he impound the books or not? Quickly! In the case of section 133A, can they impound the books of accounts? And please try to recall which are the other cases where the books of accounts can be impounded. Which are the other cases which are the cases or which are the sections where the books of accounts can be impounded? Very, very quickly, students. Can you tell me? In the next 10 seconds, only students, you need to answer this. Only in the next 10 seconds, your answer will be accepted. Devi Singh. Thank you, Devi Singh. You came late today. Rain is there, isn't it? Enjoying the rain, Devi Singh? Hitesh? No. Aparna? Hitesh? So in this particular case, 132, which are the other section, Hitesh, apart from 132? 132 is search. In the case of search, you will be impounding the books. In the case of search, you will be impounding the books. Apart from that, which are the other particular section? Apart from that, which are the other sections where the books can be impounded? Impounded means seize. Better word for 132 is not impounded. The better word, students, would be seize. Okay. Okay, Devi Singh. So in this particular case, you will say that 133A, survey, students, survey. In this case, as far as the survey is concerned, under 133A, it has to be impounded. So 133A survey, the books can be impounded. And one more section is there, Aparna, which is 131. Are you aware of 131? Which is about, remember that summons can be issued. Summons can be issued 131. And in that also the books can be called upon. These summons are being issued and the person is examined under the oath. And not only that, he will be called upon to furnish the books of accounts or any other documents or evidences. And those books, documents and evidence will be or can be impounded. The maximum time limit, students, to impound is for 15 days. Maximum time limit to impound the books is for 15 days. So 15 days is the time. So here there is no issue as far as the impounding is concerned. Absolutely fine. But the problem over here is 133A survey, books can be impounded. Yes. 131 summons, books can be impounded. Yes. 132 search, books can be seized. Yes. But what about in 133B, where you are entering the premises to collect the information? In that section also, do you have the power to impound the books? Answer is no. In that section, students, you don't have the power to impound the books, and that is the reason why, students, this is incorrect, because in both the cases he has done this. 133A and 133B. 133A for A limited, 133B for the other one, which is your B limited. The assessing officer, however, did not take any specific permission from the commissioner for this action. For impounding the books, you don't have to be careful. No? They are just trying to confuse you. For impounding the books, you don't require specific permission. But yes, in survey where the books can be impounded under 133A, when you have to do the survey, when the assessing officer has to do the survey, then the assessing officer, before he do the survey, will have to take the prior approval or prior permission. So far as books is concerned, once you do the survey, once you start doing the survey, the books can be impounded and the time limit is 15 days. No permission is required in survey for impounding the books, because already you have taken the permission. But yes, beyond 15 days, if you have to retain the books, at that point of time, the permission is mandatory. At that point of time, students, the permission is mandatory. I hope that all of you are clear with this one. Now, over here, if you see, in this context, in July 2022, the business premises of C Limited was searched. The business premises of C Limited, students, was searched after following a due procedure laid under section 132, consequent to which the assessing officer has in his possession certain documents showing information pertaining to what? shares of the value 28 lakhs purchased in previous year 2016 and 2017, and shares of the value of rupees 21 lakhs purchased in the previous year 2017 and 2018. Now, students, if you can recall, in the case of 147, if supposingly the reason of doing 147, what is 147? The reassessment. If the reason of doing the reassessment is the search 132, then there is a deemed information on which is available before the AO. It is deemed that the AO has information. It is deemed what? That the AO has information. Information about what? The information about that the income of the SSC chargeable to tax, that the income of the SSC chargeable to tax has escaped the assessment. That is deemed, meaning thereby there is a deemed information for this part, that the income of the SSC is deemed to have escaped. Income of the SSC chargeable to tax has deemed to have escaped the assessment. Now this deeming fiction is for 3 years, meaning thereby the previous year in which the search has taken place, for the last 3 previous year, we are assuming what? That the AO has the information that for the last 3 years, the income of the SSC chargeable to tax has escaped the assessment. So this assumption is for the last 3 years, which means for the last 3 years, the SSC will be required to file the return of income. And then thereafter the assessment will take place. The same assumption of the deemed information for the last 3 years is also applicable for the survey of 133A. For the survey of 133A, same deemed information of the last 3 years. What is that deemed information? That the income of the SSC chargeable to tax has escaped the assessment. In such particular case now, students, be very careful. In such particular case now, 3 years, for either it is a search or it is a survey, for the last 3 years, the SSC will have to file the return and the assessment shall be made by the AO. However, be careful students now. If beyond 3 years, if the AO has to stretch, to enforce the SSC to file the return, then he can do that also. But there is one condition. And what is the condition? Condition is that the income which is chargeable to tax, which has escaped the assessment, represented by the asset of value. How much value? More than rupees 50 lakhs. How much is the value? More than 50 lakhs. So beyond 3 years, if you want the SSC to file the return and you want to make the assessment under 147, then in that particular case, what is the requirement? That this income which has escaped assessment represented by the asset, that value of the asset which you have found during the course of search, should be minimum how much? 50 lakhs. 50 lakhs, more than 50 lakhs. And only when it crosses the threshold of 50 lakhs, that the AO can enforce the notice for the period. Which period? Beyond 3 years. So current previous year, the year of search, last 3 previous year, you can easily do under normal case because there is a deemed information. So 147, without any tension, you can easily do 147 because this finding is on account of search. Beyond 3 years, if you have to go, then the asset that you have found in the possession of the SSC, that value of the asset should be more than 50 lakhs. If you see, the search is in July 2022, which you can see over here itself. The search, you can see for yourself, students, that it is done in July 2022 in this context. And therefore, if it is in July 2022, students, you can see for yourself what exactly it is. The business premises of C Limited was searched. So previous year of search is, students, what is the previous year of search in this case? 22-23. All of you will agree? The previous year of search, students, in this particular case is 22-23. Isn't it? So with 22-23 being the previous year of search, 22-23 being the previous year of search, students, now you tell me now, in this case, last 3 years, 21-22, 2021 and 19-20. 19-20 up till 19-20, 2021, 21-22, there is no issue. There is absolutely no issue. Okay, because there is a deemed information. But beyond 19-20, if you have to go, so here the year under consideration, students, is 16-17 and 17-18. Please see, the year under consideration is 16-17 and 17-18. So if you have to do the assessment of 16-17 and 17-18, which is beyond 19-20, which is beyond that 3 years period, then the value of aggregate value of the asset which you have found should be more than rupees 50 lakhs. How much is the total over here? The total over here is, students, only 28 plus 21. So it is 49. So in that case, you cannot enforce the assessment for this 2 period under section 147. Okay, so that is the point. So only for the last 3 years you can do it, which is 19-20, 2021 and 21-22. Previous year I'm talking from that perspective. If you want to follow assessment year, then you have to push 1 year ahead, and accordingly AY would be the relevant AY. On the basis of the given facts, choose the most appropriate answer from 1 to 6. Is the action of the AO in entering the premises of A Limited at 9 p.m. and continuing the survey at 11 p.m. valid? Yes, it is valid. We don't see up till when you have to do the survey. Entering is important. He has entered during the business hours. That is what is required. So it is valid. Also, is the action of the AO in entering the business premises of B Limited at 8:30 p.m. valid? Entering, we don't have any issues on that. What is the answer? Students, here entering, we don't have any issue. The question, please understand the question. This question is only for entering part. Entering, we don't have any issue. Aishwarya, entering, students, we don't have any issue whatsoever. So yes, the action is valid. The problem is on that B Limited, what he has done thereafter, which is the asset has been which is he has impounded the books of accounts. Those are the problem, students. Those are the problem that you have to be very careful about it. Point number 2 is the action of AO in impounding and retaining the books of accounts and other documents of A Limited and B Limited. Impounding, this is wrong. Huh? For B Limited it is wrong, A Limited is proper, but B Limited is wrong. After recording the reasons of doing so, valid? No, it is not valid. B Limited is not valid. Where he has not taken specific permission for Chief Commissioner. We don't require permission for impounding the books. But B Limited, he cannot do it at all. There is no question of permission. Point A, no, the action of AO is not valid in both the cases. No, not in both the cases, only for B Limited. Yes, the action is, no. Yes, it is the wrong answer only. Okay, because he is saying for both A Limited and B Limited, wrong answer. Point number 13, the action of the AO is valid in the case of A Limited, but not. Yes, this is the right answer. This is simple MCQ, students. Anyway, can the AO, in this case, can the AO issue notice under 148 to A Limited in August 2022 in respect of AY 1920? We have already discussed. No, he cannot. Sorry, hold on. AY 1920, 2021, AY 1920, students, in this particular context. Consequent to survey conducted in the premises of A Limited. for this A limited students, there was this thing that has happened in this case for A limited students. Issue the notice for August 2022, so 22-23, he wants to issue the notice in this particular context. Now, last 3 years, but in this case, this is A limited. A limited was this one. So, A limited was a survey. Students, be careful. A limited was survey. So far as survey is concerned, what did I told you? For survey as well as for search, there is, students, one important point I need to discuss with you over here about the survey part. Students, be careful on that. Apart from this, there is one difference. I told you that for survey and for search, please pay attention to this important point. The survey and the search, students, you all know, there is a deemed information for the last 3 years. There is a deemed information, students, for the last 3 years. That is, for the last 3 years, students, you can always do this particular assessment. You can issue the notice requiring the assessee to file the ROI. Isn't it? That is the point that I told to all of you. So here is one important difference between the two, that although there is a deemed information, but then there is some procedure of 148A. Are you aware of this 148A, students? That before primarily, before you in fact start giving the notice of 148, you actually will have to do some compliance of 148A. In the compliance of 148A is more like an inquiry, or in the case of 148A, it is like a show cause notice. A notice is given to the assessee asking the assessee that why I should not be doing the assessment on you under 147. That is what that 148A notice. Now, accordingly, once the assessee receives the notice of 148A, what happens? Assessee will be replying to that notice. So there will be an opportunity of being heard that will be available. And once the assessee gives the reply, thereafter the AO will decide by passing an order. The AO will decide by passing an order whether he wants to pursue further to do 147, or he is satisfied with the reply and he don't want to pursue further with 147. So he will accordingly pass an order, and on that basis the decision will be taken that whether he want to pursue further with 147, for which he has to give a notice of 148, or he does not want to pursue with section 147. That is the procedure of 148A that has to be followed. That is the procedure that has to be followed. Yes, Abhin. Now, in that case, students, question is there any situation where there is an exemption to not follow the procedure under 148A? Is there any particular case or a situation where there is an exemption of not to follow 148A? And there is one case which is search. So if it is a case of a search or a requisition of 132-132A, then there is an exemption that you cannot follow 148A. There is an exemption that you cannot follow 148A. That is in which case? For a search or requisition of 132A. But if you are doing a survey, then although there is a deemed information, for the last 3 years period, however, be careful now. However, students, be careful. But the AO, even though the survey was conducted, the AO will be required to undertake the compliance of 148A. The AO will be required to undertake what? The compliance of section 148A. So that exemption is given only when the search or requisition 132 or 132A has happened. Only then that 148A compliance need not be undertaken by the AO. Directly he can give the notice of 148 and start the proceedings, for which there is a deemed information for the last 3 years period, and beyond last 3 years period, if he can go maximum to 10 years period, but beyond 3 years up to 10 years, for that he will have to need the aggregate value of the asset found during the course of search of how much? Minimum 50 lakh, more than 50 lakhs. Yes, I am. I hope the students now all of you are clear with this one. If all of you are clear with this one, students, so here the answer would be that 3 years period is fine, that you are telling us, but the issue is that he will have to do the compliance. So C is the answer, students. C is the answer. Compliance of 148A is necessary. Students, be careful. Compliance of 148A is necessary. You should not take your eyes off from this compliance part of 148A is necessary when the survey is there. Search or acquisition of 132, 132A, there is an exemption. Now please have a look to the next MCQ. Hitesh, question number 4. Would the action of the AO in entering A Limited is survey, at 9 p.m. and impounding and retaining the books of accounts been valid if he had surveyed A Limited only for, students, only for what? Only for the purpose of verifying whether the TDS and TCS compliance has been made or not. Students, in this particular case, be careful. If you are doing TDS and TCS compliance, in that particular case, students, be careful. That is not a place of business. And if it is not a place of business, it is the other place. That in this situation, it is referred as the other place. And as I told you, if it is the other place, then what happens, students? Then after sunrise, after the sunrise, and what? And before the sunset. After the sunrise and before the sunset only would be possible, students, over here. The TDS and TCS primarily is not a place of business. It is the other place. Therefore, after sunrise and before sunset only you can do the survey over there. Second and more important point, so far as TDS and TCS compliance is concerned, this question was also there in the earlier RTPs as well. Can he impound the books of accounts? Last attempt RTP, it was also there. So this is one of the important question for your examination. Can he impound the books of accounts? If he is doing the survey for the purpose of checking the TDS and TCS compliance, can he impound the books of accounts? Answer is no. He can't do that. So one, enter after sunrise, before sunset, which he has not done it. He has entered at 9 o'clock at night. So that is first default. And second one is that he cannot impound the books if he is entering, if he is surveying for the purpose of what, students? Indeed, for the purpose of checking the TDS and TCS compliance. So the answer would be B. No, the action of the AO in entering the premises at 9 p.m. and impounding and retaining the books of accounts is not valid. I hope that all of you are clear with this one, friends. And Indrakshi, Aveen, Apana, all of you are clear with this one, students now? Can we do point number 5? Can the AO issue notice under 148 for bringing to tax income escaping assessment in the case of C Limited without following the compliance of 148A? Without following the 148A. Now, students, which was that year in this case? Herein, if you see the finding that he has got, if you see very carefully, for C Limited, what is the information, students? In July 2022, the business premises was searched after following the due procedure laid down in 132, last paragraph. Consequent to which the AO has in his possession certain documents showing information pertaining to shares of the value of 28 lakhs and 21 lakhs of this. Students, we have discussed this part. The value is not sufficient for him to pursue for this 2 years. The value of the asset that he has found is not sufficient to pursue the case for these 2 years, isn't it? And therefore he will not be in a position to do, in this case, the assessment under 147. Although, yes, we know that that the compliance exemption is there. 148A compliance exemption is there. But the period for which he wants to pursue falls beyond 3 years. And because it falls beyond 3 years, the aggregate of the value of the asset found should be more than 50 lakhs. The aggregate of the asset that has been found should be more than 50 lakhs. And therefore, in this particular case, students, what is that we are going to say in this scenario? Quickly. Can you do it, students? So this is not required, but the answer would be in this case. So yes, he can do so. First is for the prior information. No, he cannot do it. No, he can do so only following compliance. That compliance is not required. No, he cannot issue notice under 148 since the 3 years time limit from the end of the relevant EVA has expired. This is the point. Coming to the 6th point, students. Can the assessing officer issue the notice under 148 for bringing to tax income escaping assessment in the case of C Limited without following the compliance stipulated under 148A if the share purchase in 1617 was 30 lakhs instead of 28 lakhs and all the facts remain the same? Yes, then in that case your total value is already now 51 lakhs. If we substitute 28 with 30, right now I was in 49. Right now my value was 49, therefore I could not pursue. Now you are substituting 28 with 30, so my value will become how much? 51, and therefore it has gone beyond 50. If it has gone beyond 50, then can you do this, students? Yes, you can do that. Now here, students, with the prior approval of 151, you will say, but then here you are saying approval. The 148A compliance is a show cause notice. That is not required. That is not required. 148A is a show cause notice. That is not required when you want to do assessment under 147 in consequence of search under 132 or requisition under 132A. So that compliance of 148A is not required. But do you have to take the approval of the higher authority before you pursue further? Yes, that is given to you in 151. So that is it, students. This is the question. This question I consider to be a simple one. Nevertheless, but it is repeated, those some couple of questions. Why simple? Because it is repeated through the past year. This thing, a good question. Why it is a good question? In one way, because your 133A survey, 133B, power to enter the premises to collect the information, enter 133B, and the search, all the three is being taken into account. So that way it is good, but that is it. Now please come, students. Now to, the next MCQ, students, we have already done in the part A of the RTP class. This one, beautiful MCQ in the part A of the RTP class, isn't it? That exactly the point. Now with that, now we will proceed further, students, to our next particular case. Of the MCQ over here. We have also done this up to MCQ 12. We have done this one. Up to this we have done. MCQ 2, MCQ 12 was also very good one. Perquisite, that 194R, one of the beautiful questions, isn't it? Now comes this one, the charitable trust, students. Be careful on this. Now this is basically, students, on this new section of 115 BBI. This is the amendment section, students. Remember that 115 BBI section? What is that? Quickly, students. So far as 115 BBI is concerned, students, you should be aware of it. So this is in respect of the amendment of, this is an important one, could be there in the exam. This could be there in the exam. I have given you, students, 2 screenshots in your group because those are, this question is based on some of them. This question is based on some of them, students. Nevertheless, a quick recap I'm just doing with all of you. The specified income, students, the taxation of the specified income. If I do with you over here, like 115 BBI. So there are some specified income for which the taxability is under 115 BBI, in which what happens, students, 30% is the flat rate of tax without any deduction. There are two important things that is there. One is the specified income, on which 30% is the flat rate of tax. Another is, students, a specified violation, which if you do, then the registration may be cancelled. Huh? So in those, that is specified violation. This is for the specified income that we are discussing right now, and in respect of the specified income, the 115 BBI provision taxes flat at the rate of 30%, which means no deduction of any expenditure or any loss or allowances, as the case may be. Fine. So therefore this is one important particular point. Yes. Now which are the specified income, students? Now that particular point which you would be aware in this case. So if you remember, students, here the cases which are being there, which are about, I'm just putting across here in the section number. Even if you don't remember the section number, that is fine. Just remember the concept which I've taken you through. Now there is a demand of the students to do a quick recap of the trust taxation, and therefore considering that demand of a quick revision of the trust taxation this Saturday. Now I'm done with my old batches, so therefore I will now be in a position to pursue this particular request on the part of the students. So this Saturday, students, we will be putting it, or this Sunday, whatever you, Sunday morning also I'm okay with it, or Saturday this same time, 8 o'clock, we can sit for it. So up to you, students. In this context, Saturday evening, is that fine for all of you? Quickly, 8:30 for a very quick revision, primarily not more than an hour on the trust taxation. If that be the request is accepted. So we will be meeting at Saturday for 1 hour only, students, in this case, and that would be the taxation, trust taxation, which many of the students have made a request for the same. Sunday morning, Saturday or Sunday, students? Sunday afternoon and evening we will not keep it, because what the problem is that then there is a match which is also to be played, primarily between India and Pakistan. So many of the students would be hooked on that, isn't it? The match is not for you people. Are you getting this part or not? The sacrifice has to be made. Yeah, no, this is about the score. At least I can see now. Even that needs to be stopped. Even that needs to be stopped. Is that point clear to all of you? Saturday 8:30 we'll keep it. 11:3, students. Now what are the specified violations? 4 violations are there. Which are those four violations, students? When you have exercised this option of accumulation, remember, exercise the option of what? Option of accumulation, students. Exercise the option of accumulation. Just a second, let me reduce the font. Exercise the option of accumulation. Remember, then in that case, there can also be a lot of default over here. Which are the defaults that you can do? The default, students, that you all can do over here. Are you aware of the defaults? Like for example, in this case, like for the period is all you know is 5 years, including the current year period plus 5 years in all. In totality, students, there is a 5 years period. So that is one thing. Then you know, so therefore, supposingly you are taking the option of accumulation, and the accumulation was more than for 5 years. That is a default. Other than that, if you remember, if you take an accumulation option, then you have to invest in the mode specified under section 11.5, the safe security, government security, or the safe investments. So therefore, the government securities or the safe investment, there, that is the mode of 11.5. So you have to deposit that 11.5 when you choose to accumulate. You may have done the default for that. So that is one of the default. Another default is what, students? Misutilization. Misutilization, students, isn't it? So therefore, in that situation which has been there, so we can just speak about in this context the default which happens, which will result into deemed income. So I'm just putting a quick reference for all of you over here, like misutilization. Yeah, that I'll say, Hitesh, as misutilization. Then non-utilization for that 5 years period. And then thereafter, students, the next particular point is not deposited within the mode of the 11.5, not invested in 11.5 mode. So these are some of the default. Other than that, students, the next particular point, which is the other specified income, would arise when there is a default of 11.1b. Visa, thank you very much, Svia. The default of 11.1b, students. So in the case of 11.1b, what do we say over here? In the case of 11.1b, students, do you remember what is this 11.1b, by the way? Remember, if you don't receive your money, so non-receipt of money, students, please recall that. If you cannot receive your money, then what happens? In the current year, Aniket, thank you very much. In the current year, students, what happens? You can claim an exemption. In the current year, you can claim an exemption, students. If you don't receive the money, and because of that, you are not in a position to do the application for charitable or religious purpose in India, in that particular case, that reason of non-receipt of money will fetch you what? Will give you what? The exemption under section 11 in the current year. But as and when you receive the money, or the year following the year of receipt, the year in which you receive the money or the year following the year of receipt, you will have to make the necessary application. In case there is non-application or a shortfall of the application, then that will result into deemed income again. That will result into a deemed income again. Deemed income of which year? The year following the year of receipt. So that is the case when the money not received, and then subsequent default. So that subsequent default, which you could not apply the money in the year of receipt or the year following the year of receipt, then it will result into a deemed income. So in that situation, it will be considered, Jignesh, so it will be considered as deemed income, students. And therefore, what we are going to say, it will be a deemed income and accordingly will be charged to tax. Is that point clear to all of you, students? In this case, but charged where? Under 115 BBI. Charged where? Under 115 BBI, and accordingly, students, the specific rate of tax of 30% is what is going to be made applicable. Is that point clear? Thank you, Aniket. So therefore, this is the point. I hope that all of you are clear with this one. Then the third one, students, this is an interesting, this is where, in fact, students, why I'm doing it, the MCQ is so minute that in fact we never digged into that much minute area. That's the reason why I shared you the screenshot of our textbook, just to highlight that minutest point, which is the basis of this particular case study. What is that? The third default, students, this that much minute, even we have not digged it, which ICA has targeted it. And that's the reason why, students, just pay attention on this particular part very carefully. The other violation, students, is that 13(1)(c) violation. Other violation is what? 13(1)(c) violation. And in the 13(1)(c) violation, students, which has been there, you can say what? 13(1)(c) violation, students, you can say for it. that when you are applying the income, apply income on what? Applying the income on the specified person. On whom? Specified person. Now you will say, so who are specified person? So specified person, as you know, in this case, the trustee, isn't it? In this case, so in this scenario, students, is it the case of trustees and all? So I can say here in the trustee, here in this case, the author of the trust is also a person. The author which is there in this context. Substantial contributor, students. I just want to make you go through right now because this question is based on that. Substantial contributor. They are also a specified person. You'll say many students are asking, so who is substantial contributor? I'll just let you know, and the relatives of all these person. The relative plus the relative of all these person. Let me take you through the substantial contributor, students. This chart I have already shared with all of you. I'll take you through to that particular slide. Just before I do that, let me then wrap up this particular part. Okay, so this is the case 13(1)(c), and the last one, students, is what is the last one, students? So the last one, students, in this case is about 13(1)(c) or so last one, students, in this scenario 13, in this case 13(1)(d). Yes, founder and author. So students, over here 13(1)(d) is about, as you all know, indeed I am 13(1)(d), students, as you all know, what exactly it is? Money not invested, money or income not invested in the mode specified, in the mode specified in the mode specified, oh sorry, just writing money or income invested in the mode other than those specified in section 11.5, other than those specified in section 11.5. Yes, sir. Arunati, thank you, Arunati, thank you very much. All the last particular batch students are coming live. So 11.5, so money or income invested in the modes other than those specified in section 11.5. Those specified under section 11.5. Fine, students. This is the point. So this is your 13(1)(d), students, which has been there. Now let me take you first to this particular part, because this is an important one. This MCQ is actually based on that. So that's the reason why I just need to take you through to this. So here in this context, students, I'll just share with you. Please have a look. I've shared with you this one. Can you see this one, students? Third box. In the third box, if you see your chart which I've shared with all of you, please see the chart which I've shared with all of you. What it is? Any income of third box. In this case, what it is? Any income of a trust used directly or indirectly for the benefit of the following. Who are the following? Author, founder, thereafter if the founder or the author is your family member, trustee, manager. See point number 6. See, these things everyone will know, but this point number 6 is what the MCQ was all about. What is point number 6? Any person who has made a substantial contribution. How much? Contribution of more than 50,000 to the trust. They are the substantial contributor, and therefore if the income is applied on the substantial contributor, then that also would be considered as a default. That also would be considered, students, as a default. Is that point clear to all of you, students? That's exactly the point. Now if you see one more particular point which has been there, this will come a bit later, so I'll just do it as and when it will come. On that background, students, let's look upon to this particular context. Let's see. Students, please have a look on this part. Question number 13. Now some information as and when it will come, I will take you through to that particular angle. But right now let's focus on this one. Compute the specified income taxable at 30% under 115 BBI in case of registered charitable trust, Edu8, running an educational institution. Please underline the word educational institution. The educational institution students. From the following information students. From the following information given below. So what is the information students in this context? Let's have a look. From the following information students given below. The main object of the trust is education. See for yourself students over here now. Be very careful. Huh? Corpus donation students over here, which you all can see, received by the trust. Students, corpus donation received by the trust. What they are saying for the corpus donation in this regard? So far as the corpus donation is concerned, students, so far as the corpus donation students is concerned, received by the trust is 12,20,000. Students, are you aware of the amendment of corpus donation? I have taught you in the class also on the corpus donation. In this context, what exactly it is? So far as the corpus donation is concerned, Miraki, thank you, Miraki. Good, tell me one thing. Let me ask you one question. The question to all of you therefore is, so far as the corpus donation is concerned, please tell me one thing. So far as the corpus donation is concerned, are you supposed to make the investment in the mode specified under section 11? Quickly! Are you supposed to make the investment in the mode specified under this one? So corpus donation students, you have to be very careful about it. Huh? So far as the corpus donation is concerned, if you all are also are aware of the amendments part of it, so just be very, very clear about this one. So what is the scenario, students? As far as the corpus donation is concerned, you will take a note of this particular part. Three things you should always keep in mind after considering the amendment part now. So here in point number 1, be careful. I mean, corpus donation herein, if it is invested, first one what I am writing, students, in this context. So the first one, students, I am writing is if invested in the mode specified. If invested in the mode specified. In the mode specified. Of section 11.5. Then what we are going to say? for corpus donation. What we are going to say, students? It will not be considered as an income. Not an income then. So this is a condition. The second particular point, so far as the corpus donation, students, is concerned, the second particular point, students, so far as the corpus donation is concerned, Indrakshi, Hitesh, Aveen, in this case. So if the be careful law, this is where you people go wrong. Absolutely you have to be careful on this one. If not invested, because what is the, please understand, before the amendment and after the amendment, what is the difference? Before the amendment, they used to not invest. Before what? The amendment, they never used to invest. And still, the corpus donation was never used to be considered as an income. It is a capital, so it was not considered as an income. Today, after the amendment, the position of law is that if a corpus donation, if we have to treat that it is not your income, a corpus donation, if we are supposed to treat not as your income today, then you are supposed to do the investment in the mode specified under 11.5. And where you don't make the investment in the mode specified under 11.5, you don't do the investment. So not invested, not invested at all. This is the second point. Then what happens, students? It is considered as what? It is considered as income, which is derived from the property held under the trust. Derived from the property held under the trust. Held under the trust. Be careful. This is point number 2. And coming to point number 3, students, in this context, what is point number 3? If invested where? If invested other than in the mode specified. So it is invested, but other than in the mode specified, of section 11.5, then what we are going to say, students? Then this is where is the default of section 13.1d. Can you see this? 13.1d. And if it is a default of 13, if it is a default, then in that case, default under 13.1d, default under 13.1d, and therefore a specified income, and because it is a specified income, 115 BBI at the rate of 30% will come into play. 115 BBI, students, will that come into play? And the answer is yes. So be careful, students, if invested other than what? In the mode specified at 11.5. This is the real game. What about this part, students? As you can see for yourself, this is your only normal income. You can see for yourself. If you have not in the money you have received as a corpus donation, and then you have done nothing. You have just mixed this money in your, you have put it in the normal bank account. So you have not done any investment of that. And you just have mixed this income, mixed this corpus with your normal income, other incomes. So if you have mixed your corpus with your other income, then gone. Gone means it is considered as your normal income. Normal income, but not a specified income. That is a difference. So therefore, this is not, however, a default of 13.1d. This is not a default of 21D, and therefore not a specified income. Not a specified income for the purpose of 115 BBI. For the purpose of what? For the purpose of 115 BBI. I hope that all of you are now clear with this one. Every one of you. That exactly the point. So students, I hope that every one of you have copied this one or not. Such an important particular observation. Have you all copied? Quickly. So 3 things always you remember for the corpus donation. Which are the 3 things? First, you receive the corpus donation. You invested where? In the mode specified in 11.5. That's it. This is the amendment. So it is not considered as your income at all, Aishwarya. Point number 2. Point number 2 is you have received the income, you have received the corpus donation, and what you did? You did nothing. You mixed this particular amount. You mixed this income or this amount with your normal income. So if you mixed it, you did nothing and you mixed it, then now we'll treat this as also as a normal income. We'll consider it as what? As a normal income. And the third one is whether default will arise, where you have made the investment in the mode other than the mode specified of 11.5. You have made the investment in a mode other than the mode specified in 11.5. In that case, it will be considered as a specified income on which 115 BBI, the rate of tax is 30%. That would be applied in this case. That would be applied in this case. I hope that every one of you are clear with this one. All of you students. So this covers up this particular part. Again, on this, if you have captured this, I'm coming back to the case study now. So students, please have a look in this context. So compute the specified income taxable at 30% under 115 BPI in case of registered trust. So this is an educational trust, educational institution already known. Now below this, if you see, corpus donation received by the trust, 12,20,000. Students, be careful. The same has been invested. The same has been invested as follows. Deposit in post office. Post office safe investment? Yes, safe investment. 2 lakhs is fine. FD with SBI, nationalized bank. SBI is a nationalized bank. In that, keeping the FD safe? Yes, safe. Not an issue. Deposit with the cooperative land development bank. Cooperative banks also, students, they are what? Considered as a eligible for investment purpose. 1,10,000. The most notorious is now the fourth one. What is that? Deposit with non-banking financial companies engage in the retail finance. So just like a private NBFC, I have picked up, and in that I have done what? I have done this investment. You tell me now, students, is it fine? What do you think? Is it okay? No, it is not okay, students. Not okay at all. And therefore, what will happen, students? Can I therefore say this will be 13(1)(d) or not? Will this be 13(1)(d)? And the answer is yes. And all the remaining 3, because you have made the investment other than the mode specified under 11.5. And what is that investment? The deposit. And Nandagiri, Indrakshi, Hitesh. So this is what you should always keep in mind. And hence we will say what, students? That this will be considered as what? As an income, which is a specified income. And therefore 30% will be the rate of tax. Ram Kumar, Ashwarya. So this is what it is. Point number 2. Please come to point number 2, students. In this context, income applied by the trust for the benefit of the following donors. Donors means substantial contributor. Yes, Hitesh, your observation is correct. Point number 1, Valish 24,000, Ritesh 48,000. Obviously, students, they are the donor, students. How much donation they have given? 24. Are they substantial contributor? No. What about Ritesh? Is he a substantial contributor? No. What about Arjun? Is he a substantial contributor? Yes, he is. Therefore, students, in this case, income applied. Be careful in this scenario. For Arjun, students, who is substantial contributor, and accordingly in this scenario, we did that third default. Which is third default? 13(1)(c), and therefore 115 BBI. Here also 115 BBI will be applicable. Here also 115 BBI will be applicable. Now come to point number 3. In point number 3, income applied by trust for the benefit of Mr. Vaibhav Gupta, trustee of the trust. Income applied by the trust for the benefit of whom? Mr. Vaibhav Gupta, the trustee of the trust. Obviously, students, he is a trustee of the trust. So goes without saying, this would be a specified income. Isn't it? Trustee of the trust, definitely in this context. So in that situation, students, this is also 115 BBI will come into play in this context. Point number 4. Who is point number 4? Income applied by the trust for the benefit of Shamlal, Manohar Arora, Sridhar Agarwal, being the employees of the trust. Employees of the trust. Is the employees of the trust was mentioned in that list that we did? Employees of the trust? No. So therefore, by way of interest-free loan to them for pursuing higher education. So this is not there. So we will not consider it in this case. So income applied for them, this is not default, will not result into any specified income. It is not a default, students, so therefore not a specified income. In this scenario. So therefore now, students, this is what it is. Now coming to this particular part, point number 5. Value of educational service made available by the trust through its educational institution to the 2 children of Mr. Vaibhav Gupta. Now this is what I wanted to tell you, friends. The second screenshot which I shared with all of you. Value of, students, be careful. We are talking about the value of educational services made available by the trust through its educational institution to the 2 children. Just, students, I want all of you to pay attention on this part now. Note number 1. Students, note number 1 in this particular context. The note number 1, the second screenshot which I have shared with all of you in this context. What exactly it is? If a charitable or a religious trust is running an educational or hospital, so it is only for educational and hospital, exemption shall not be denied by reason only that such trust has been provided educational or medical facility, to any of these specified person. So means 13(1)(c) is not applicable. 13(1)(c) is not applicable. Just because you have given the medical or educational benefit to whom? To these specified person, because you are yourself a medical or a educational institution, and being a medical or the educational institution, you have given the benefit to the specified person. Okay, in that particular case, what they say? They say that it will not be considered as the default of 13(1)(c), that you will lose your exemption. So which means there will not be any specified income. What it will be? See here. However, the value of such education or medical facility shall be deemed to be the income of the trust and shall be chargeable to income tax. But as your normal income, that is it. This is not considered as a specified income. See how minute you have picked up, students, this thing. It is there in the textbook also in this scenario. But IC has picked up such a minute thing in this context. So that's one of the point. So therefore, students, what we are going to say, so far as this point is concerned, we shall say, students, in this context that be careful. We shall say, students, in this particular context, what is that, students? Quickly, that 13, whether that value, will it be considered as the default of 13 month C? Answer is no. Think logically also. A huge big hospital is there. And in that hospital, the specified person also may go to the treatment. It may be very renowned hospital. Think of it. In my city, this is the best hospital. And just imagine in India, many small towns, they have got hospitals, school and colleges which are run by the trust. And in those towns, that is the only college or that only hospital which is there. Now, just because I'm a specified person, if I fell ill, I should not go to that hospital. Otherwise, that hospital will lose the exemption. Let I die in the process. Isn't it? So therefore, the law has some humanity, students. And this provision is showing that humanity level. They say that fine. In this case, we will not consider that you will not be, the exemption will not be lost. It is not a default of 13 months C. Just that whatever is the benefit, whatever is the value of the benefit which has been given to the specified person, on that value you will have to pay the income tax normally. The income tax normally. I hope that all of you are clear with this one now, friends. Every one of you. And that exactly is the point. So therefore, students, this is how the things has to be looked upon. Coming back, therefore, point number 5, students. Point number 5, will it be considered for 115 BBI? No. This 115 BBI in this case is not applicable. 115 BBI is not applicable in this case. The reason is already told to you. That's a beautiful MCQ, students. What do you think of it? Your first reaction on this MCQ? Value of educational service made available by the trust through its educational institution to the children of Mr. Manor Arora and Sridhar Agarwal. Any case, they are not a specified person. So the children who are relative, they are not a relative of a specified person. They are not a relative of specified person. So therefore, there is no violation of 115 BBI. Point number 7, students, in this context. Amount set apart in previous year 21-22 by the trust for charitable purpose under one. So you are setting apart or accumulating. Students, be careful. You are setting apart or accumulating for some specified purpose. Setting apart or accumulation for some specified purpose, isn't it? So amount set apart in previous year 21-22, last year, by the trust for making for charitable purpose under 11.2, utilized in the previous year 22-23. Utilized where, students? In the previous year 22-23 for making donation to another charitable trust whose object is also education. Can you give donation? Once you decide to accumulate or set apart, then the question to all of you is, can you give the donation? And the answer is no. So can we therefore say it is a default of 11.3? 11.3 is the first default. 11.3 default. And hence this will result into a specified income. Because once you choose to accumulate, you cannot thereafter donate. So specified income under 11.5, 115 BBI, taxability will be there. So the correct answer is, what is the correct answer means what correct answer? Correct answer means I think you have to take the total. Total is what is required in this case. Compute the specified income. So here you have to compute the specified income. So which are the specified income? 4,10,000 specified income. 4,10,000 specified income. Do you all agree or not? Indeed. So 4,10,000 specified income. Then in that situation over here for Arjun, it is a specified income 30,000. So 4,10,000 plus 30, 4,40,000. Thereafter, in this case, 4,40,000 plus 25,200. Add this 4,40,000 plus 25,200. Quickly keep adding. Then thereafter, students, what else was there? Students, what else was there in this context? So, over here, students, to 25,200 also you have added 25,200 plus what after that? So after 25,200 add this only 2,13,000 students. After 25,200, 2,13,000. So what is the total? What is the total of this? Quickly. 410 plus 30 plus 25,200 and then 2,13,000. If I'm not mistaken, this first one, students, 6,78,200 Aishwarya. I am Ram Kumar. Perfect. So first 6,78,200 is the answer, and that exactly the point, students. That exactly the point. So this is what it is, students, in this regard over here, which is to be considered in this context. Now this MCQ is also a good MCQ which has been there. Students, first of all, you have to understand this one thing, TDS. Students, TDS, as you all are know, and I have taught you also, TDS, students, there are two types of default. This question takes you to the penalty level and what are the consequences. So it's a good particular question. Please pay attention to the proposition of this question. Be careful. Nice question, students, in this context. So the proposition of this question, if I have to tell you, is this. As you all are aware, so far as the question is concerned, what happens, students, in this case is that there are two types of TDS default. Which are those two types of TDS default? Two types of TDS default is there, students. And which are those two types of TDS default, students, in this context? So the two types of TDS default in this scenario is, one is when you have not deducted the TDS primarily at all. That is the first default. And second default, students, is what? When you have deducted, but what, students? When you have deducted the TDS but not deposited a TDS. That's the second default. When you have deducted the TDS but not deposited a TDS. Students, do you know government? Now, all you know, in these case of TDS default, students, what happens? In these case of TDS default, there is a disallowance that take place. The disallowance, students, will take place. So you have to bear the consequence of the disallowance for sure. You have to bear the consequences of the disallowance for sure. You just can't avoid that. But then there is a larger point which you should keep in mind. Unfortunately, the battery of my this thing has run out. I'm just changing the battery, but some issues are there. I can't right now. So in this scenario, please pay attention over here. What did I told you? That in this particular scenario, the default is very important to be considered, students. The default is very important to be considered. The first default, students, Shri Krishna, is this, that disallowance will be there. That is for sure. We don't deny on this particular part. Disallowance, students, will be there in this case. Okay, but what else? The other would be the interest levy. Please be careful. Are you aware of the interest charge? The interest charge, students, that you all are aware is 1% is the interest charge. 1% is the interest charge in the case of the TDS which is Not deducted. Should just please pay attention, huh? Because the battery of my this thing has run out. Now this is a real challenge. All of you just pay attention to listening in this particular context. So the interest will be charged at the rate of 1% per month or part thereof. 1% per month or part thereof for non-deduction of TDS. For non-deduction of TDS. Is that point clear to all of you? 1% per month or part thereof for non-deduction of TDS. Point number 2. If I have deducted the TDS, so 1% per month part thereof for non-deduction of TDS. If I have deducted but not paid, then it is 1.5% per month or part thereof till the date when I deducted, and will be counted from which up till the date when it is finally deposited. So that would be for 1.5%. That will be for 1.5% students. I hope that all of you are clear with this one now. Okay, so that is the interest charge. Secondly, what about the penalty? Now students, here the penalty is being charged, which has been there for when you are not deducting the TDS over here in this particular context, students. You are not deducting the TDS, students, in this scenario. If I can just make a last attempt to write it. Just let me see. No, students, unfortunately this is done. So just please pay attention, students, all of you. So over here in this context, so what happens, students, over here now, apart from this, what will be the interest? Yes, indeed, there would be also a penalty, students, of section 271C. Penalty of section 271C, students, and that penalty of section 271C in this case, the penalty under section 271C would be up to a maximum of how much? The TDS which is not been paid. That is the maximum amount of students in this context. Now, more important point is this. Be careful. More important point, students, is this. Be careful, all of you. There would also be a prosecution. Prosecution, students, also will be there. And the prosecution, students, will be, which is the most serious default? Think logically, students, which is the most serious default out of the two? Which is the most serious default out of the two? Non-deduction of TDS in this scenario, or after deducting the TDS and not depositing to the government? Out of the two, after deducting from that payment, I've deducted the TDS from that payment which I have to make to the payee. So 100 I have to make to the payee. I've deducted 10 as TDS, 90 I've paid, but that 10 I've not deposited. What do you think? In the first case, what would have happened? Non-deduction of TDS, I would have paid 100 rupees. I would have paid 100 rupees. In fact, you would realize and you'll appreciate that in the case when I'm paid full 100, not deducted TDS, full 100 I've paid, there is still a chance for me, who is the payer, who have paid the full amount without deducting the TDS. There is one important chance that I will not be treated as an assessee in default. I will not be treated as an assessee in default. Do you all agree? How I cannot be treated as an assessee in default? Do you know? If the payee who has received the amount, if he will take that amount into his income consideration, If that payee who has received the amount, if he takes that amount in his income consideration, in that particular case, I will not be considered as an assessee in default, because he will take entire 100, and on that entire 100 he will then pay the self-assessment tax. I will be spared. Then from that year, the year in which the payee has considered the entire 100 in the total income, computed the tax liability, paid the tax, filed the return, and furnished a report of the CA, from that year onwards, I will not be considered as an assessee in default. I will not be considered as an assessee in default. So by not deducting the TDS, at least somebody else will comply. But if I've deducted the TDS, then what happens? This is a crime. He will also not do the compliance. Why? Because he will take a credit, and then 26 AS, all that will not match. This is a crime. And therefore, in this case, students, what happens in this case is that this will result into a prosecution of 276B. This will result into a prosecution of what, students? 276B. And that exactly is the point. Therefore, students, in this context, a prosecution is what will be filed in this regard, in this context. So, the question therefore is, students, interest under 201A penalty and prosecution would be attracted. Okay, just hold on. Let's read the question, students, in this case. Let's read the question, students, in this case. I'll just make a last attempt, students, if it is possible. Good, or else tomorrow I'll just change the battery, students, and then maybe the remaining question. Students, May 23 RTP has also some 3 questions which are good. I have identified that. 3 questions of May 23 RTP. If you want, I can just do that also, because those were not targeted in the last attempt. But then I will combine it tomorrow only, because tomorrow in this case is the only way now I can manage it out. Okay, let's read this question, students. ABC Limited has failed to deduct at source on payment to contractor during the previous year 2022-23, even though the payment exceeded the threshold limit of section 194C. XYZ Limited has deducted tax of ₹62 at source on the payment to contractors on the time during the previous year 22-23, but has not remitted the same up to 31st March 22-22. So what has happened, friends? XYZ Limited has deducted. So they have deducted. So whether XYZ, will it be prosecuted? No. They will be prosecuted. XYZ students will suffer a prosecution. Hitesh, the problem is that the battery morning, if I have to keep, the problem would be on this one. Morning only I will be in a position to procure the batteries. Unfortunately, battery which is in spare, they are actually not spare. They are like you keep these, something which you keep. These needs to be disposed of. Electronics. This is what it is, which I'm facing right now in my case. Anyways, I'll do this thing, but tomorrow morning, how it is possible, because I have to procure in the morning only these batteries. So evening only Hitesh would be possible, because this battery needs to be procured in the morning itself. Now XYZ Limited has deducted tax of ₹62 lakhs at source on payment to contractors on time during the previous year 22-23, but has not remitted the same up to 31st March 2024. They have not remitted, students. Which of the following? So XYZ is a criminal. He will go to jail. XYZ students is a criminal and he will go to jail for sure. Okay. ABC interest and penalty maximum. XYZ interest, penalty, everything plus jail. So students, point number A, Point number A, students, in this context, is what? Interest under 2011A, penalty under 271C, and prosecution under 276B would be attracted both in the hands of ABC Limited and XYZ Limited. It will be attracted both in the hands of ABC Limited and XYZ Limited. Both are students. Be careful. In such particular case, students, you tell me only now. All of you. In such particular case, students, you only will have to tell me what will be the consequence in this case. Quickly. Whether point number A is right? No. ABC will not go to jail. XYZ will go to jail. Point number B. Interest under 2011A and penalty of 271C would be attracted in ABC. Fine. Interest of 2011A, penalty of 271C, and this is the right sentence, students. B is correct. B is the correct one, students. I hope that all of you are clear with this one. B is the correct answer. Is that point clear to all of you? Sorry, C, students, C. So B. The interest would be 1.5%, students. Interest would be 1.5%. B is the correct answer. Interest would be 1. I told you 1.5%. You deduct the TDS. So what happens? You have to pay interest. Interest from which date? From the date when you deduct till the date you pay. And what is the rate? 1.5% per month or part thereof. What is the answer sheet? C option is there. How come? Answer sheet C option. Let me check. Let me students just what's confirm. 271C. Just leave, let me, yeah. Interest is there. Penalty is not there. Penalty 271C. Just a second. Just let me. We'll confirm straight away. So if you see over here, penalty point, students, the provision of section 271C of the Income Tax Act comes to the picture only when the deductor either fails to deduct or fails to deposit the same. So the penalty has to be there, huh? I'll confirm this one, but I have got a doubt on this one. The penalty part. Let me first confirm 271C on this one. I'll confirm this one, students. In any case, this would have been the last MCQ. I'll just confirm on this particular part. B option says what? Just hold on. Okay, just hold on. Krishna is saying interest under 2011A and penalty under 271C would be attracted in the case of ABC Limited. Okay, fine, that is fine. Interest under section 2011A, penalty under 271C, and prosecution under 276B. No, that is not the case, Krishna. 270 for XYZ. That is why XYZ. But X. This is. Prosecution has to be there, no, in this case. Herein. Prosecution has to be there. We will just see once. I'll just confirm on 271C, students. Let me first confirm on this one. 271C. Tomorrow, students, I'll just confirm on this particular part. I'll be confirming on this particular part, students, 271C option on the penalty part. Okay? In this particular context, let me confirm it, folks. Here, I think otherwise you guys will waste some more time in this. I'll confirm it and then I'll come. In any case, I'm doing it extempore on these things. So let me first confirm that perfect language of 271C on this part. This is a quite minute one. So just let me just confirm once on 271C and I'll just come back onto you. Tomorrow, friends, primarily we will be meeting at 8:20 and we will be doing this remaining plus that if time permits, I'll do with May 23 for all of you. Some 2-3 questions I have found it in this context. So that is the point, students, which has been there. I mean, yeah, that let me confirm once. That I was just having this thought process, but let me first confirm because it's better always to confirm one if there is some doubt on the mind before we conclude this thing. So let me first confirm it once and only then I'll conclude it, because that's primarily some doubt on any particular point. It's better to confirm and I'll just come back to you on this. I'll see you tomorrow, students, on this particular part in this context. So as I told you, students, tomorrow the balance part plus May 23, some 2-3 questions are good, which I'll just try to deal with all of you. This could be an important particular session, students. I told you in the first class also, I'm repeating it again. Known sources only would be there for November 23. No surprises. Okay, so that is it, students. So it will be helping you for your last mile practice. See you then, students, tomorrow 8:20.